because the back 3 rows are filled, so everyone can get out of here as fast as possible. Traffic. I get it. Nice job, but I can see back there, so everyone's going to have to address you guys all in the back for sure. Again, my pleasure to just thank you all for coming here, and again, we put on these events for you, and our sponsors are obviously part of that process, and without them we wouldn't be able to put on these events for you. And keep in mind, our main motto is that we are the preeminent voice for independent advisors. That's why we're an association, that's what we're here for, and we're here for you guys to service you. We will be receiving feedback by email, so please fill those out, because that's what helps us going forward as well. So take the time, fill out the email, let us know what you think. We can't improve on these, we can't make them better unless we're here for you. And we have heard from people throughout the sessions, and we appreciate that as well. Of course, our sponsors who I would like to thank. We have our lead sponsors of Financial Planning Standards Council and SAFG Benefit Solution Inc. And we also have our premium sponsors, Canada Protection Plan, Canadian Counseling and Psychotherapy Association, Canadian Institute of Certified Executives, Experior Financial Group, the Leading Advisor, Registered Deposit Brokers Association, Sharma Wealth Management, the Big Idea Company, and our video sponsor, Asset TV. And of course, our media sponsors, the Investment Executive and Wealth Professionals. So thank you to all of our sponsors. Well, one housekeeping note, we did have at our booth, somebody found or may have misplaced quite a large, that size magnifying glass. So if you're missing that, please go to our booth, we have it there. And if they are packed up and not there, they'll be at the security desk on your way out. So housekeeping, if you found that at church, please retrieve it. So my pleasure now to introduce our last speaker of the day, Evelyn Jacks. Evelyn is Canada's most respected educator in tax and financial literacy, and one of Canada's most prolific financial authors. She's penned 53 books for consumers on tax and wealth management, many of them bestsellers, including her most recent, New Essential Tax Facts, How to Make the Right Tax Moves and Be Audit-Proof, as well as Family Tax Essentials, How to Build a Wealth Purpose with a Tax Strategy, and she has twice been named one of the top 25 women of influence in Canada. Evelyn is also the founder and president of the Knowledge Bureau, Canada's leading national post-secondary educational institute for professional development in the tax and financial services area. She is the publisher of over 3 dozen professional certified courses. She didn't publish them, I guess the association did, but including the RWM, which is Real Wealth Manager, the MFA, Master's Financial Advisor, and DFA Tax and Bookkeeping Services Specialist designations, and the new Executive Business Development Program. Knowledge Bureau is celebrating its 15th year this year, and having grown to become Canada's only private educational institute to provide career training with specialization in tax, retirement, business building, succession, as well as estate planning. Sounds like some of the things we do on a regular basis for our clients, so it is certainly great to have her here. She has trained tens of thousands of advisors and communicates with close to 20,000 legally. It is also a training partner to top national firms engaged in building highly informed professional advisors, and the Knowledge Bureau works with small businesses as well to assist in achieving business growth goals. So it is with great pleasure that we introduce Evelyn Jacks.
Well, wouldn't you know they put a tax speaker on at the end of the day? And you're here, who knew? I'm so delighted to be here with you today. I'm so delighted that Knowledge Bureau and I are partnering in an educational value proposition with you. And I'm in particular delighted to talk to you at this very important time in Canadian tax reform history, because in fact we are going through a tax reform at this time. And there's many reasons for that, and I hope that as I talk to you about some of the specific things that you need to be talking to your clients about between now and the end of the year, that some of that comes to light for you, the fact that things are changing quite significantly. In fact, demographics are changing and the way we work are changing. But I love these times because they're always times of great opportunity and of great energy. And if you can capture this wave, then what you can do is position yourself to have a practice of outstanding and true value for your clients. So I'm going to, I've got about 95 slides. How much time did you say that I had here today? I promise you that I think one of these two ladies is going to give me the hug when it's time for you to go. You've heard a little bit about who we are. One of the reasons why we love to work with tax and financial advisors across the country is that they themselves are independent business people, and they work with a lot of independent business people who in turn have families who are all trying to answer the same question, and that question is what? Do you remember what that question is that your clients worry about every day? What is that question?
Why do I pay so much tax?
Well, that's the second question. Why do I pay so much tax? But what's the first question? What is the number one question that you are dealing with?
How can I not pay taxes?
Oh, okay, we'll make that the number one question. I was thinking about this one. Will I have enough? How many of you hear that? Okay, that is the number one financial question of Canadians, is will I have enough? It worries them on a daily basis. So what we wanted to do at the Knowledge Wheel was a couple of things. First of all, to integrate the work that tax and financial advisors do. That's really important. When I was in tax practice, I remember saying to my clients often, you know what, if I'd only been with you when you were making decisions about insurance and investments, if we could have weighed in on those decisions, then we could have given you a tax viewpoint on some of those issues. Often when we saw our clients, by that time it was way too late. And there were a couple of things we could do. We could make sure that we claimed all the deductions and credits that they were entitled to. We could combine those things with family members as best we could. We could invite them to buy an RSP before 60 days after the end of the year, but we really weren't involved in the wealth management strategy. And in fact, when we started 15 years ago and wanted to contemplate that serve as a thesis for our school, we realized that in order to have a wealth management strategy, first of all, it's a multi-stakeholder approach. It's not an individual approach, it's a multi-stakeholder approach. And what happens when you've got multiple stakeholders at anything? Have you ever tried to put together a family reunion? You know, it's pretty difficult. You have to have everybody on the same page, everybody on one plan. And so, real wealth management is the concept that we came up with, and all of our educational courses speak to this. And it's really important because if you are going to build sustainable family wealth, then you've got to have everyone on the same page. All the professionals, the insurance advisor, the investment advisor, the legal advisor, the business valuator, the tax accountant, all on the same page. And then on the other side, you've got to have mom, dad, grandpa, grandma, the 30-year-olds, they're emerging babies. By the way, we are having a baby any moment now. My son and his wife are expecting. We're going to be grandparents for the very first time. It's an awesome time. But what everybody in those two hubs needs is one real wealth manager who keeps people to plan. And that's what a real wealth management strategy is. Now, what's sustainable about it? The only thing we really can control as we accumulate, grow, preserve, and transition wealth with all our family stakeholders, which is the 4 pillars of wealth management, is we have to manage taxes, inflation, and fees. Now, let's talk about fees for a moment. I'm not just talking about the fees that are charged in the investment or in the insurance world. I'm not even just talking about the fees that are charged by tax accountants. I'm talking about the fees that a dysfunctional family is going to pay to their lawyers, and that's going to dissipate wealth faster than the tax fees. Have you heard the Stronach story recently? Isn't that sad? You know, these are families that are not going to be speaking to each other, grandchildren, etc., not speaking. And so, you know, we want to avoid that. 7 things we look at: accumulation, growth, preservation, and transition of wealth with purchasing power. Because when we do that, when we control inflation, taxes, fees, as part of that equation, we get peace of mind. And when Your clients can stop asking the question, will I have enough? When they have the peace of mind of knowing they're on track, on time, and they will absolutely be okay, then they are truly wealthy. Wealth is a feeling, it's not a number. True wealth is a feeling, not a number. And so here you are, the real wealth manager in the middle, managing a multiple of stakeholders to keep your family on plan. And in order to do that, you really have to continuously raise the bar because things are changing around us all the time. At Knowledge Bureau, we primarily teach online, but we also teach in the classroom. Next time we're going to be here in Toronto on January 21st, and we invite you to join us. We're going to be talking about personal tax all day, and you all have a discount by virtue of your membership here, and we're pleased to provide that. And you're going to be building on some of the things I'm going to be talking to you about today, on ways that we can still help our clients minimize taxes. So I want to get, that's my book if you want one. It's around somewhere here, and very happy for you to use that as a tool for your clients. Okay, so 6 basic strategies that we really want to talk to our clients about right now. And the first one is file a tax return. Now, how many of you know in your client base of any taxpayers right now who are delinquent in filing tax returns? Hands up. Okay, you know what? When I talk to tax accountants, all the hands go up. They all have clients, even within their base, who are procrastinating about filing their tax returns. And that's a tragedy for many reasons. First of all, most of them are owed refunds, and those monies are not making any strides in the marketplace at all. They're not even earning interest. But if these people owe money to the government, then they're going to owe the taxes. They're possibly going to, they probably will be owing late filing penalties, possibly a gross negligence penalty, which is 50% of the taxes due. If it's willful blindness, it's tax evasion, 200% of the taxes due, plus potentially jail time, and interest compounding daily at a 6% rate. And so your taxes payable become the least of your worries. We really want to encourage people to get it together, get their taxes filed before the end of the year, because then we can start doing some good stuff with them. And some of the good stuff is that, for example, if they have missed deductions and credits on their tax return, they have a 10-year period of time to recover them. Did you know that? So, for example, if you missed allocating or reporting capital losses on your tax return in 2008, then we can recover and preserve those capital losses, and that's very important. And year-end is typically a time when we're harvesting losses, and the reason why we want to do that is offset all other capital gains of the current year, and if we have capital losses unabsorbed after that, we can carry back 3 years. Well, when we do that, these capital gains that we have 3 years, within the last 3 years, we generate tax refunds, and that's fantastic. That's new money that would go into a TFSA or an RSP that your clients didn't have before. Perhaps it's new money that they can actually use to shore up those underinsured relatives within the stakeholder group, within their family group, and that's really important because insurance benefits are tax-free. That's an important part of everyone's estate plan. How do you find the money to pay for it? Well, if you're doing the tax right, you're going to spring loose new money to leverage on family wealth creation. That's really important. Sorry, I said that. You know what? I flew in here last night at 2 in the morning, and I'm running on 3 hours of sleep, and so I hope I'm not speaking too fast, but I'm just feeling a little bit of jet lag. The next thing that we need to know about losses, and I'm going to sit here for a moment because we can carry unabsorbed losses forward also. And how far in advance can we forward them? Indefinitely in our future until we hit the next period of capital gains. Of course, I'm talking about non-registered accounts. Your capital gains lose their identity within your registered accounts. But it's a beautiful thing because if you never have another capital gain as long as you live, on your terminal tax return you can offset all other income of the year with your capital losses and all other income of the previous year. They're tremendously lucrative. And you know what? People just don't claim them. A couple of reasons. They think, well, I don't have any capital gains to offset against